Hello everyone, we welcome you all to the first episode of CFA Saudi Society podcast. I'm your host Umar Al Hilali. Our topic for today is the derivative markets in Saudi Arabia, and our guest today is Sree Kumar, Chief Derivatives Officer in Tadawul.
Thank you, Omar. Thank you, and salam to everyone who's listening to this podcast. I'm actually very privileged to be here and giving an introduction to the derivatives in the kingdom, for the kingdom as well. And let me start off first by introducing Tadawul, the Saudi Stock Exchange. Most of you would have heard about Tadawul, the Saudi Stock Exchange, uh, which is like a platform which is providing prices and where stocks are being traded. Basically, Tadawul is a stock exchange where many products are traded. It doesn't stop with stocks alone. It trades on bonds, REITs, ETF, and now since last Sunday we launched the derivatives market, and many achievements have been achieved for the past couple of years by Tadawul. Of course, the big one was in when we got upgraded to emerging markets by MSCI, and that was a very proud moment. And we are now in the spotlight of most foreign investors who are looking at us. And then everyone knows this: the largest offering, the biggest stock offering, which was Aramco, which was done on December 12th. We got listed in Tadawul and last year. And that actually put us in the top 10 exchanges globally, and we are very proud to say that. And of course, we even before that, we were the largest in the region of Tadawul. But today, I'm here. I'm going to give you an insight on what derivatives is all about. Something which most people uh, have too much. They don't really dwell into it because of they think it's difficult. It's not difficult, but it's a lot more simpler when you understand it more. And especially when I'm talking to an audience like you, CFA, I'm sure with your intelligence and experience, you would definitely will know what the derivatives is all about. And let me tell you that it's not something which we came about. This is actually something which is under the Vision 2030 program, and one of the program is the Financial Market Development Program, which has a direct impact on our Tadawul itself. And one of the initiative among them is ensure the formation of an advanced capital market. And under that bucket of that, we have 14 initiative, and one of that is introduce derivatives. So that has been completed now on 30th August, last Sunday. And this initiative rather, is led by our regulator, Capital Market Authority, CMA, along with we the stock exchange Tadawul was supporting it and established the market to offer and trade the derivatives contract. Why do we do that? We want to attract institutional investors and diversify away from the retail-driven market which is currently prevailing, and we have succeeded as well. I mean, since MSCI inclusion, we have seen uh, more institutional investors, local and foreign, and it took us about 2 years. The project took us 2 years, but it needs 2 years because we need to upgrade and update our regulatory framework. The system had to be prepared, uh, and of course, the most important thing, and which, from my experience, I was from Malaysia and other parts. Derivatives is important. The awareness workshops are very important, and I cannot stress even more than this that the success of the market depends on the awareness of using derivatives as a product. So
On that point, Sri,
yeah.
probably one of the biggest questions for the general public about derivatives is what is the role of derivatives in the market? How can I, let's say, use the derivatives as an investment tool? How it's different from the stock market that we have, which has been there for a lot of years. I mean, what in derivatives for the investor?
Good question. Before we what we did at Tadawul, we knew that, as I was stressing on market awareness, we have a program by Tadawul, which is called Invest Wisely. And we have done many programs, nearly 10 for retail, for the brokers, for university students, to make sure that they are aware. And we will still continue do this market awareness on how they can participate. And please look out for the Invest Wisely program. But coming specifically to your question, Omar, the how can we use derivatives? Again, there are two parts to it. One is the retail, I mean the retail market, retail driven market. Retail here, I mean individuals who are trading the market on a daily basis, what we call directional trading, and who will typically in the stock market will buy to sell, and something very important, and I need to mention in the derivatives market, you can actually sell the market. You don't need to own the market. You can sell derivatives contract as well. So if the retail if is bullish on the market, bullish here means if you think the market is going to go up, you can buy the derivatives, and if you think the market is going to go down, you can sell the market. And importantly, you don't need to own something to sell because these are just contracts. And there's another layer of people sector, which is the institutions and high net worth, both high net worth and family businesses and institutions which have a large portfolio of stocks. And these stocks are kept for a longer term. It's not for a week or a month or even for a year, and it's kept for a long term for a return. And so this portfolio need to be protected. How can they protect it? At this moment, before the 30th of August, they can't do anything if the market comes down. I mean, they have a portfolio of say about 1 billion, for example, and the market is coming down and it drops to 10%, they lose about 100 million. They lose another 20% when it drops another 200, another 100 million. But what can they do now? They can hedge the market. They can protect the market. They can eat sort of an insurance, uh, and they can protect the market from coming down by doing a futures contract. What they do, because they hold the shares, they will sell the derivatives market. So they will sell the derivatives contract to protect the portfolio which they have, Omar. So you have two sets of people. One is the retail, and one is the institutions and the high net worth who and portfolio managers, including asset managers who can hedge the market. There is a third part, third sector, which is very prevalent in the international markets. These traders, they have no interest. They have no interest in buying the equity market. What they do, they come into the market and they just trade on a directional market, and they will basically speculate on the market. And they don't they use machines, uh, and it's all algorithmic trading, and it's something which will very soon will come to Saudi Arabia, I think, as well. And derivatives, once again, is an alternate. If you think you want, if you want to buy Saudi Arabia as a portfolio, you can just buy the index. And how do you buy the index? There are two ways. You can buy the ETF, and most simpler, you can buy the derivatives contract as well.
Sri, you've touched upon a very important point, which is about the asset managers being able to create new products through derivatives. Could you elaborate on that point?
Sure. Asset managers basically, there are two ways they can use the derivatives. One is actually, when I say asset managers, I'm going to include fund managers here as well. Asset managers who are holding stocks or holding assets on behalf of families or on even behalf of the government, or any other institutions, they can they can they can hedge their portfolio. Basically, they can start hedging their portfolio. In fact, I'm going to share my experiences, what I learned from USA. I was there for some time, and how important, and it's called fiduciary responsibility for any asset managers who's managing funds for the public or anyone, to ensure the funds he has will be protected, and by virtue of using derivatives. In fact, in places like US, they'll be questioned sometimes. Why do you not use derivatives to protect your market? Your assets by the asset holders or the unit holders actually. So they can use that basically and hedge your portfolio. And there's another link where we call it future fund managers. What these future fund managers do, instead of stock picking, instead of picking each one of the stock, what they will do is to form a fund, and maybe about, say, about 1 billion SAR value of fund, and they will invest into the futures. So, and the beauty of this funds is you can buy or sell. As again I mentioned, in futures you can buy and sell. You don't need to own anything to sell the futures. So there are two ways asset managers can do. One is to hedge, and actually is to set up a future funds to manage it. It's a very popular business in other parts of the world. I'm sure we have just launched it. I think over a period of next 1 or 2 years, you will see future fund managers coming into the market. In fact, the audience I'm speaking to, the CFA champions I'm talking to, uh, this is the kind of business which a lot of the CFA graduates and have moved into, where they join asset managers, and they look at derivatives, how they can use derivatives to enhance value and return. Omar.
Yeah. So, Sri, I have a question regarding as you've mentioned about the asset managers and the general investors and the derivatives market. Just for the benefit of the audience, if you can give a very simple example of how a transaction could be done on MT30 index, for example.
Sure. And for the benefit of everyone, MT30 Index Futures is the first contract we have launched. MT30, it means MSCI Tadawul Index, which is a index which was launched by MSCI and us. And so the underlying is the MT30, which is available. The prices are available on our website, tadawul.com.sa. And what you need to, if you want to trade the market, the MT30 Index Futures, you need to open an account with any of our 6 trading members. For the benefit of the audience, I would like to mention here our pioneer members. What I mean by pioneer members is 6 of them actually joined in our journey to in the derivatives market, and they have now uh, started trading from last Sunday. As you're aware, we got 30 over APs in the Saudi Arabia. 6 of them, I will name them, our pioneer members: HSBC Capital, Goldman Sachs, NCB Capital, Samba Capital, Deraya, and Francie Capital. So you can approach any one of them. And if you have an existing stock account, it's all the more better because due diligence would have been already done. And the process will be a lot more easier. Otherwise, even otherwise, the process is still easy. Talk to any one of these brokers and open an account. What is important here is you should know the product itself, the MT30 Index futures, which I will try to go on later part of this program. You need margins, and any one of you see because you are qualified, you will be able to easily participate because we are very concerned about for those who are participating in the market. And what we do is we are the retail, the man in the street who has not done anything. We are very risk averse, and both CMA and us. We want to make sure that people understand this business, but also CFA holders will come under qualified client under the tier one individuals, and you can start trading the market. So it's a lot more easy for you to trade the market. The access, of course, our brokers will be able to provide you with the system, and it's traded very similar to how the equity market is traded. You'll get a system where with your user word and user and password. Of course, you need to put a deposit, a margin rather. We call it an initial margin. The minimum will be about it depends on the brokers how much minimum they will ask you, and you can start trading the market once you open an account with them.
So my next question, Sri, how accessible is the futures? And when I say accessible, I mean how much of a minimum capital would qualify an investor to go and invest in the futures?
Again, Omar, I have to say that it depends. It depends on the individual brokers, but the minimum margin which you need to pay is the margin which we have required. The clearinghouse Mukasa has prescribed the margin for these contracts, and that's a minimum. And depends on what part of client you are. If you are an institution or a corporate clients, such as even the individual DPMs who are manage the funds, they pay the minimum which the clearinghouse asks for. At the moment, is about 13,600. Is about 13,000 to 13,600. If you are a tier one, you pay slightly higher, about 33% higher. And if you are tier two, which is a retail, you pay double, which is over 26,000. And that is a minimum which you need to do one lot, one contract. Again, each individual broking company may have a minimum. They can ask you to put in 50,000 or 100,000. Remember that the index value, which is more than 100,000, and you are getting a leverage about nearly 5 to 6 times. So it's a leverage game. So when you put this amount 13,000 or whatever case, or if it's higher because you are a tier one, and if you're a tier two, which I don't think I'm talking to any tier two clients in this, you may have to pay higher. Again, subject to the individual broker who may ask for the minimum capital you need to start the market.
Then after depositing the minimum requirement, the settlement happens on a daily basis, depending on
Yes,
the movement of the market.
Yes, it does. It does. Once you have opened an account and you have put your deposit and you have traded, say example, you have traded one lot, you have sold the market. Let me talk about selling the market because remember, as you'll hear me repeating it many times because I've been asked this question for the last 20 to 30 years. Can I sell the market? I don't own a product. Can I sell the market? So that's why you'll find me repeating this. When after selling the market, for example, if you had sold the market at 1,200, I'm talking about MT30 as an example, 1,200. And if the market, it's end of the day, it is mark to market. Every day, your position which you have sold is mark to market. So the settlement takes place at the end of the day. So by the end of the day, Mukasa, our clearinghouse, will pass on to the your broker what are the outstanding positions, what are the status of those positions mark to market, and depends on that the broker will credit your account on a daily basis or debit your account on a daily basis. So settlement, you're right, it takes place on the end of the day every day.
Great. So for each, let's say for each investor who want, for example, to buy the future contract, there is also another investor who will sell the future contract. My question: would the Muqasa party takes, let's say, an opposite position against any other investor, or should it be investors always?
Okay, it's a good question because Mukasa, the clearinghouse, will actually perform as a buyer to the seller and seller to the buyer. The buyer would not know who the seller is, so they will guarantee all the trade. They guarantee the settlement and the clearing of all your trades. So if you are buying the market and there is a seller, you actually buy from the clearinghouse, and the clearinghouse will sell to. You buy from the clearinghouse, and on the flip side, they will be the one who will be selling to the buyer, and they will buy from the seller. So Mukasa will act as a buyer to the seller and seller to the buyer. Mukasa, of course, would not make the prices. Mukasa, it will be on your other side. Your counterparty will be another investor who's buying or selling, whichever case it may be. But Mukasa, the clearinghouse, will stay in between to act as a buyer to the seller and seller to the buyer.
Okay, so Muqasa role will be just as a clearing house. It will not be extended to, let's say, provide liquidity in the market of the futures, right?
Right, absolutely right. Because there's even the exchanges and the clearinghouses. Nowhere, no, I haven't heard of them providing liquidity. We will, from the exchange perspective, of course, we'll be looking at more participants to come in and provide the kind of liquidity. So we are not in the business of providing liquidity, but we'll facilitate customers who want to participate in the market, and they will provide the necessary liquidity to the market.
Three, a major milestone has been achieved last week by the introduction of the first product in the derivatives market, MT30 Index futures. Could you walk us through the main highlights that happened during last week with the introduction of MT3 Index futures?
Sure, and since Sunday on the opening day, we did about 24 lots, and subsequently we did five, and some days we did one lot. But that is from my experiences in the derivatives market. I've seen many launches of new products and other markets. This is a typical way of how market starts, especially new products, which is not very familiar in any region, and especially in the kingdom. This is a new product, and what most brokers are right now doing, they are testing their system. They want to see whether their trading system works, whether the clearing with Mukasa settlement, everything works, whether the money flow, the credits and the debits happen. So that is happened on the first week. We anticipate the market to pick up, inshallah, and we hope that the more participants will come into the market and trade the market. I'm actually quite glad that we had a seamless. market in the first week. That is what's very, very important to us to make sure that all system work. And that has happened. And now is to get the business. And we will continue to talk to potential investors, traders, and also to our members, our pioneer members who I mentioned earlier, to support and to come with the market.
Yeah, it's very interesting. The first week of the MT3 index futures, it was, as you have said, a successful launch. But I have, let's say, a couple of questions that I call it frequently asked questions about MT3 index futures. Uh, do you see usually Sunday less crowded in terms of trades, given that a lot of foreign brokers are on a weekend?
Uh, at the moment, because it is a very domestic market, so despite the fact that there are foreign participation as well, you may be quite correct that Sunday you may not have much foreign participants. I would say the traders, but the big advantage is also the Sunday factor, which let me explain in a couple of words about why Sunday is a big advantage to Tadawul and to the derivatives market, because the underlying is in operation. The underlying is working. There is trading going on in the stock market, and our contract is based on the stock market. And it is a big advantage, including for foreign participants. They are already trading our market on a Sunday. For them to hedge, they have now an avenue on Sunday. So uh, it's a big advantage to the whole market. And secondly, something which some people may miss out, that mostly the announcements, most of the things which happen around the world, and again based on experiences, happens on a Friday. Some announcements in US and other parts of the world, it happens on Fridays. Of course, Fridays we are closed, but when the markets are closed in, like for example, in the US Wall Street on a Friday, which is the first market to react? Will be in the kingdom. It'll be Tadawul, and now we have the derivatives market. So derivatives market uh, performing or operating on a Sunday is a big advantage that hedgers and traders to come into the market. In fact, they can even use Tadawul derivatives market as a proxy for the region itself. Sometimes, let me give you an example. For example, if the oil prices, for example, which it's been very volatile over the period, but volatile, the oil has an impact on the economy of the region itself. And when it happened on a Friday, or Thursday or Friday, uh, before the other markets open on a Monday, we were open and we can react towards it. And similarly, the derivatives is now open on a Sunday, so foreigners can now take advantage and trade the market on a Sunday. Believe me, foreigners and other traders, they work 24/7, and whenever there's an opportunity to make money, they will come in.
True. And another question is about the future. So, when let's say the investment industry heard first about the introduction of the futures, one of the most frequently asked questions was about the operational hours of the futures market. There is a thought that why it's not extending beyond the market TASI operational hours.
In fact, Omar, the our market actually opens at 9:30. As you're aware that the Saudi stock market opens at 10 o'clock. We open 30 minutes ahead of the market, and we close at 3:30. If you know our market closes around 3:10, and we actually extend to 3:30 and start the market at 9:30. This is a frequently asked question to us: is why do you open early and why do you close late? The reason is for those who want to hedge or put a position in the market, they can come in as early as 9:30, because when the stock market opens at 10 o'clock, market is going to be very busy in the stock market. So for the derivatives traders to get involved in the market, they can come in at 9:30. Why they want to come in at we extend it to 3:30? If you some of these markets, some of these announcements, some of the market moving announcements comes after the market closes. So we'll be able to capture that 10, 20 minutes of market, which is prevailing after 3:10 until 3:30 for us to react with market. So we do open early and we do close late.
Great. So it will give the investors, let's say, an extra space to express views on the market. There is a half an hour before the market and another half an hour after the market closes.
Absolutely right.
Yeah. Sree, you come with a lot of experience in the derivatives markets, whether in the region or even back in Malaysia. So, how do you see the liquidity and the evolution of the derivatives market in Saudi compared to the other markets you had experiences in?
I have traded the global market, so I can say about how the global markets. No markets open or goes up like a rocket, with the exception. I may have to say two countries. One is China and is India. These two countries, by sheer number of population and sheer number of traders there and retail traders, the market has taken off very immediately when a new product is launched. But the rest of the market, it takes its own time, including new products which is launched in places like US. So liquidity is built over a period of time. Liquidity, of course, begets liquidity. Once liquidity comes to the market, you will see more people coming in. And look at the number one exchange in the world now, which is the Indian exchange, Indian market. It took about 4 to 5 years to have this kind of liquidity in the market. China, it took its time, but once India and China they took off, they really took off like a rocket. But I'm very confident over a period of time with more market awareness from us, with more participants from the local institutions, more participants from the foreign institutions, and our retail coming in to trade this alternate trading instrument. Here, I have to mention that this is not an investment product; it's a trading, mainly a trading, hedging, arbitrage product. I'm very confident that it'll be faster than other markets. Within the next 1 or 2 years, you'll see it hitting some good volume, but uh, but we hope it's sooner than later.
Hopefully, inshallah. And this brings me to my next question. So, we saw the successful launch of MT30 Index futures. A lot of investors, a lot of the general public are asking about what's the outlook for the derivatives market, what is in the pipeline that is coming in terms of stock specific futures or options, other derivatives to be introduced to the market. If you can just shed some light on that point.
Sure, Omar. And we, as was announced this week over the Bloomberg by our CEO, the next product which we are looking to launch in the first half of next year is the single stock futures. Single stock futures would be more acceptable, more closer to the heart of the equity traders, rather. They are very familiar with the stocks. They will be more familiar with the stocks than the index. The reason why we launched the index is a much simpler product to understand how futures work, and so that we can introduce a single stock futures that is in the pipeline. Yes, you're right. The index options, the MT30 index options, and the single stock options is also in the pipeline. Maybe after the single stock futures, I reckon it should be around in 2022, 21 or 22, later part of 21, 22. But our focus now will be to launch the single stock futures.
Excellent. I think once the introduction of more and more products in the derivatives markets, this will definitely attract more liquidity, and we'll see more products coming to the market, catering to investors to invest in the derivatives markets, such as long short funds and strategies. That will definitely will be more visible once more products are there in the market. One important question, Sri, is about the employment opportunities for the investment professionals. When you see the introduction of a new product like the derivatives, definitely there is an organic growth in the sector that would create a new jobs. If you can highlight how the role of the derivatives market in creating the jobs for the investment professionals.
This is, I think, I would consider this one of the most important question, and as one of the tangible benefits, you would have heard us talking about how much volume we are going to bring to the market. Those are benefits which will bring to the Tadawul, but what benefits it brings to the kingdom and for the locals, the Saudis, is important. Employment opportunities, and I'm talking from experiences, what I've seen in other countries, and where opportunities have come in. Let me start off by saying that there's only six brokers, APs, right now involved in this market, and I believe within the next 1 or 2 years, this number is going to double or triple, and they will be looking for the brokers themselves will be looking for number one, traders, dealers to handle customers, research. This opportunities will cut across the members of CFA and across everyone, but in particular, the CFA members, you'll find a lot of opportunities are coming about. And I'm talking from where I come from, Malaysia and Singapore, Hong Kong, mostly from Asia. There'll be from the research side, there'll be a lot of opportunities. Each broking shop and other companies, research companies, will be looking for professionals. Trading itself, you will have most companies will start setting up trading desks. They will need people who knows the market to trade and hedge and arbitrage. So there'll be a demand for traders in the market. Then you will have fund managers, as I told you, fund managers, those who are creating the future funds, for example. You need people who understand the market, and there'll be a big demand for that as well. And with market makers as well. Market makers are those who quote two-way prices. There's already a demand for looking for market makers in the region as well, in globally as well. Risk managers, very very well sought out people in the derivatives market. Risk management plays a very important part in this industry, and especially in the derivatives market. There'll be a demand for risk managers, and many. It'll multiply many in this. So there's a, as you rightfully said, this is an organic growth. This is a new industry. This is going to grow and multiply many opportunities. And finally, proprietary trading. For example, there's a big market out there in globally where there is an organized proprietary trading. That means individuals who will actually trade for themselves, and which the rest of the region, they call them locals. It just means they are proprietary traders who are trading for their own account or a family capital. So this is going to open up a lot of opportunity for everyone. Institutions are going to look for people. Once institutions know that there is enough liquidity in the market, they need people to actually write the programs. They will need people who can trade the market and read the market. So this augurs very well for the industry and for the kingdom.
Great, Sri Kumar. Thank you very much. It was a very fruitful discussion about the derivatives markets. If you wanna just add anything or the closing remarks for our discussion.
Thank you, Omar. Once again, I'd like to thank you, and of course, I thank CFA and for giving me this opportunity to talk to this esteemed crowd. I'm actually very privileged that I'm talking to you, and we hope that you will ask us more questions. And of course, Omar, you have my email. Please circulate it to your members. If they have any other questions to ask, they can always write to me, and we hope that every one of y'all will look at derivatives market and provide and support this market, and spread the word around, talk about futures, and if you need any kind of assistance, any training or any programs like which has been now done by Invest Wisely, if you need anything, please let us know, uh, and we will be happy to provide. Very soon, we'll be launching the market simulator on our website, and that'd be a good start for you to start simulating trades on the market as well. And remember, this is a dawn of a new opportunity for everyone, and this is a historical event in the Saudi capital market. I have to thank the confidence which the exchange had in us, and of course the regulator. And once again, thank you for giving me this opportunity.
It's our pleasure to have you with us, Sri Kumar, Chief Derivatives Officer in Tadawul. Thank you very much, everyone, for listening. This is your host, Umar Al Hilali.